Hello, I'm Sebastian. Welcome to 9 Trees podcast. Today, I will summarize and review the book. A Teenager's Guide to Investing in the Stock Market by Villermin is a beginner-friendly personal finance book designed to help teens and young adults understand how stock market investing works and how to start early with confidence. Framed around the idea of investing hard now to enjoy more freedom later, the book introduces core investing concepts in plain language and connects them to real-world choices students face, such as part-time income, saving, and balancing short-term wants with long-term goals. Rather than treating investing as something reserved for finance professionals, it breaks the process into approachable steps, learning key terms, choosing an account, understanding risk, and building habits that can last for decades. The emphasis on starting young highlights the power of time, compound growth, and consistent contributions. For readers who feel intimidated by charts, jargon, or market headlines, this guide aims to provide a practical on-ramp to thoughtful, long-term investing. I will give you key takeaways from this book. Firstly, why starting early changes everything. A central theme is that age is an advantage in investing because time increases the potential impact of compounding. The book emphasizes that early contributions, even small ones from allowance, gifts, or part-time work, can matter more than large deposits made later. It frames investing as a long game where steady progress beats perfect timing and where patience can reduce the stress that comes from day-to-day market movement. For teens, this perspective helps shift the mindset from chasing quick wins to building a system that works through school, early jobs, and adulthood. The book also connects early investing to lifestyle outcomes, the ability to afford options later, such as travel, career flexibility, or reduced financial pressure. Alongside motivation, it provides a practical rationale for prioritizing investing while expenses are relatively low. By focusing on long-time horizons, the reader can learn to see market downturns as temporary and potentially beneficial for buying at lower prices, rather than as reasons to quit. This topic sets the foundation for responsible risk-taking and consistent habits. Secondly, stock market basics without the intimidation. The guide aims to demystify what stocks are and why markets exist, explaining ownership, companies raising capital, and how investors participate in business growth. It clarifies common terms that confuse new investors, such as shares, dividends, market capitalization, indexes, and volatility, and it positions them as tools for understanding rather than barriers to entry. For teenagers encountering finance vocabulary for the first time, this approach matters because confusion often leads to avoidance or impulsive decisions. The book also highlights the difference between investing and trading, encouraging readers to view the stock market as a place to build wealth over time instead of a casino for quick bets. It introduces the idea that broad market exposure through diversified vehicles can reduce the need to pick individual winners. This topic supports financial literacy by showing how prices move, why news affects sentiment, and why long-term fundamentals tend to matter more than short-term hype. By making the mechanics feel understandable, the reader is better prepared to ask the right questions, compare options, and avoid being misled by social media trends or sensational headlines. Thirdly, risk, diversification, and the mindset that protects beginners. A key investing lesson for teens is that risk is not just about losing money, it is also about uncertainty and emotional reactions. The book emphasizes diversification as a practical defense, encouraging readers to spread exposure across many companies or sectors rather than concentrating on a single stock. It also discusses the importance of aligning investments with time horizon, since money needed soon should generally not be exposed to heavy market swings. For a beginner, this helps create guardrails that prevent panic selling or overconfidence after a lucky gain. The guide also reinforces that volatility is normal and that a well-chosen long-term plan should anticipate downturns. This topic typically includes warnings about trying to time the market, chasing hot tips, or investing money that should remain liquid for emergencies. By focusing on process over prediction, the reader learns to evaluate choices based on controllable actions, saving rate, contribution consistency, and fees. The mindset element is especially useful for teens who may be influenced by peers, online forums, or influencer content. The book encourages disciplined behavior so that the investing journey remains sustainable through inevitable market cycles. Fourthly, getting started step by step with accounts and contributions. For teenagers, the biggest barrier is often not motivation but logistics: where to open an account, how to fund it, and what to buy first. The book walks readers through practical starting points, including the role of brokerage accounts and the common need for a custodial arrangement when underage. It emphasizes simple routines like setting aside a percentage of income, automating contributions when possible, and treating investing as a recurring habit rather than a one-time event. This topic also addresses basic planning decisions, such as setting goals for different timeframes and deciding how much to keep in cash versus invest. It encourages readers to start with what they have and scale up, rather than waiting for a perfect salary or perfect market. The guide also brings attention to costs that beginners can control, such as fees and unnecessary trading activity, because small leaks can compound negatively over time. By focusing on execution and repetition, it helps teens move from learning to doing with a structure that can carry into early adulthood when income increases and financial choices become more complex. Lastly, building long-term habits for financial freedom later, the invest now, play later framing points to a broader life strategy, using early discipline to create future options. The book encourages goal setting that connects investing to meaningful outcomes, such as education flexibility, entrepreneurship, or earlier independence from paycheck to paycheck living. It highlights that consistent saving and investing can be paired with smart spending rather than extreme deprivation, helping teens avoid burnout and stay committed. This topic reinforces the importance of patience, learning, and gradual improvement, including revisiting a plan as income changes, knowledge grows, and priorities evolve. It also promotes a healthy relationship with money where progress is measured by habits and long-term trajectory, not by comparing portfolios with friends. By focusing on controllable behaviors, the reader can develop confidence and resilience, two qualities that matter as much as financial knowledge. The overall message is that investing is one part of a larger personal finance system that includes budgeting, avoiding high-interest debt, and making intentional choices. For teens, these habits can compound alongside money, creating a durable foundation for adult life. In conclusion, this book is best suited for teenagers, high school students, and young adults who want a clear starting point for stock market investing without heavy math or professional jargon. It is also useful for parents, teachers, and mentors who want a straightforward resource to guide a first conversation about investing, custodial accounts, and long-term planning. The main benefit to a reader's life is the shift in mindset from waiting until adulthood to begin building wealth toward taking small, repeatable actions now. By focusing on compounding, diversification, and disciplined habits, the book can help reduce fear and prevent common beginner mistakes like chasing hype, overtrading, or quitting during volatility. Compared with many investing books written for experienced adults, this one is positioned around the realities of teen life, limited income, big future goals, and the need for simple systems. Its value comes from making the on-ramp feel achievable and motivating, which is often what new investors need most. For readers who want an accessible guide that encourages long-term thinking and practical steps, it is worth buying as a focused introduction tailored to a younger starting line. If you would like to support Luc Villermin, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.